So let's start here on the weekly chart. Now, the reason I'm starting on the weekly chart, and I always start on the higher time frame charts, is because price is following these higher time frame intentions. This is one of the keys to understanding how to get a 100% win rate. So what am I always looking for? Well, I'm always looking for a sideways range on the left-hand side of the chart. This is where price is contained. So we know that orders are created here, so that when we see range and initiation, and price comes back into this range in the future, every time price taps into this range, you can see that price is moving away. You see here we tap to move away, tap to move away, tap and move away. This is showing that the banks are protecting the positions that were created inside the sideways range that we have here. Now, if we apply on our understanding of RAMC, then we have range, initiation, mitigation, which is the phase we're always looking for, and potential continuation. Then we have a very clear target for price as well, which is down into that low down here. Now this is an order flow pattern, it's a bearish order flow pattern. It's really important to add on three other concepts to RAMC, and that's because we're trying to understand direction. It's not just about looking for ranges that are happening anywhere on the charts, because we can see that not all of the ranges on the charts end up playing out. They're playing out at specific locations. So that's why we apply on concepts together, so we can build high probability trading ideas and understand direction. And as we can see on the charts as well, what we're picking out on the ranges to the left, price is showing us on the right hand side that these are the correct locations to look for, because we're seeing reactions away from this location. So every time price got into this location, we have a very clear understanding on where price might want to turn and move in the opposite direction. We can also read the price action here as well, and price is telling us that it doesn't want to continue any higher, and then we move lower. And same again here, we use another one of our concepts to understand when price is turning, and a lot of our traders caught the entries right at the very top here, anticipating this big move here to the downside. This isn't luck, we're literally picking out ranges that happen to the left, and we're adding on a few more concepts to make sure that we know that price is going to react from this location in the future. And then when price gets here, this is where we zoom into the 15-minute chart or the 1-minute chart, and we're looking for our entries here. So that is the first thing I'm always looking for on the higher time frame, to give me an area where price might start to turn in the future. And just imagine, once you understand this concept, and once you understand the concepts in trading missing pieces, you're going to have them for life. For example, if you day traded and you started to make a lot of money from day trading, what about if you made a lot of money and now you want to scale back a little bit? You don't want to be in the charts every single day, or you want to be on the charts 3 days a week, and you want to just execute maybe 1 or 2 positions a month and just allow your profits to just run. Now, you're going to have that fundamental skill when you can understand these concepts. You can take them into crypto, you can take them into stocks, you can take them into other Forex markets. Any markets out there all move in the same fundamental ways, and RAMC is a fundamental of how price moves. We can literally see it on the chart right now. Price is reacting from a sideways range and we're moving away. This is no different to any other markets, because once you understand who's in control of the markets and how they get involved in their positions in the markets, and how they have to move the markets, and how everything is manipulated and controlled by the major players, you realize that the market will never change. It's always going to stay this way. As long as there is money flowing, the market is always going to be exactly the same. So money would literally have to evaporate for us to not trade in the same way over and over again. So there's longevity in what we're doing here, and there's longevity in understanding how price is moving and understanding these core concepts. So armed with this information, we understand where the turning points are within the market. Now let's zoom into the 15-minute chart so you can see how I'm able to get involved in these moves, getting 100% win rate from these moves. So now we're down onto the 15-minute chart. I've just scrolled out and we're at that point of mitigation. And like I said before, we understand that price is going to change its direction. How do we understand? Well, we used exactly the same pattern that we used on the higher time frame as we see on the lower time frame here. We can see that price is in this sideways range here. We got the initiation to the downside that created this low. Every time we pulled back into the mitigation of this sideways range, what do we see? Move away, and move away. Now, these moves away are quite big. So when we're on the lower time frames, these are profit potential moves, even though they might look small and just might look like reactions. And obviously from a higher time frame perspective, these will be very small moves. But when we're using our session and setup strategies, we can find really high probability trading opportunities with this direction in mind. Knowing that on the higher time frame we're about to change direction, and seeing a bearish order flow pattern is price literally telling us that it wants to move to the downside. There's one concept that we teach outside of RAMC that helps you to understand this change in direction, and I'm going to teach you how to read it. so that you can get involved in these opportunities exactly like I've done and exactly like our community's done. One of our experienced traders, Charlie, also caught this exact move here to the downside, run above that high into the mitigation, and then we start to see that bearish trend. This happened during New York session and he got involved playing the direction of the market. This is using my 15-minute strategy, and we just play directions. All we need to understand is the concepts, understand where we're located on the higher time frame. We know that we're bearish. So then during the session, we're just executing with a 10 pip stop loss. It's very easy and simple trading. And I try and make my trading as simple as I possibly can, because I know the execution part is what everyone struggles with. So what I do in my execution is I make it rule-based, I make it 100% mechanical so that anyone can trade it. It's literally about just learning the rules, understanding the direction using the concepts, and you're going to be consistent with my strategy. So what do we see here? Now we start to see aggression and speed, and this is what we're looking for again. We're looking for range initiation, mitigation, continuation, because as you guys know, this is that bearish order flow pattern, which shows that price wants to continue to the downside. When the banks sell, it means that they want to continue moving price to the downside. And as we can see, price just continues here to the downside as well. Now, this is where I got involved using my session and setup strategy. So let's put the sessions back on, because this is really important to understand. It's not just about trading at any times of the day. It's about trading when there's a high probability of seeing big moves in the market. Now you can see most of the time during the sessions is when we start to get those big moves. And we're not looking for 70, 80, 90, 100 pip moves. We're looking for 25 pip moves in order to make consistent returns every single month. So this is my setup coming into play. This is the bank selling again. This is what you're going to start to learn in the session and setup strategy. And then we see the direction of the market coming in. And like I said, we just execute with a very fixed stop loss and a fixed take profit. And there is rules to move to break even, and there's rules to cover your stop, and then there's rules to get out of the trade. A mechanical process that makes trading easy, because we just need to understand direction within the market. We need to understand the structure of the market, and then we can start to read that intention during our session window, and then we look for our specific setup, and that's job done. I only trade 3 days a week as well. I'm looking at the markets on a Tuesday, a Wednesday, and a Thursday. The reason I look at the markets on a Tuesday, Wednesday, Thursday is because that's all I need to make double-digit percentages every single month. These are the 2 trades that I've been involved in so far. This is the first one, again, just playing the direction of the market. There was also trades inside here as well, but this was a news day, so I decided to not get involved. This is a Friday here, but again, we see my setup again on Friday, and that would have been a potential winner as well there on Friday. And then we move into the next week. Sometimes when the market isn't giving us opportunities, we're really clear and understood on when to stay out of the market in those low probability trading opportunities within the market as well. And that is a really key skill. So the rules that you learn not only help you to get into the market, but also how to identify how to stay out of the market. And that is a big problem for a lot of traders, learning how to stay out of the market. So I've made it very simple and easy for you to follow. Just follow the specific rules and make sure you turn up to the webinars every single week with me so that I can take you through the trades that I've been taking and why, so that you can continue to build and learn your own strategy and start to develop when to get involved in the market and when to stay out. And that's the keys to everything that you want in trading. That's the keys to you to pass your funded account, to build your own private account, get private investors. All of these things are just about understanding when to get into the market and when to stay out of the market. And that is exactly what I'm teaching here at NJAT. So we move on here. Again, we can see that there was a news day. I don't get involved in news days and I don't get involved in low probability trading days. And as we can see, these 2 trading days were very low probability. We just ranged for the whole session, so we stay out of the market. Now, this is when the high probability trade opportunity came in again. We can see again that price is ranging. We've run above that high of the range, and now we're in that bearish continuation. So again, right at the session open here at 12:30, like I said, I just execute with a fixed stop loss and a fixed take profit, and I know exactly how I'm going to execute the trade. Now, look at this setup that happened here, right? Price has run above this high, and we've moved in the opposite direction. Now, like I said before, Charlie got involved in this trade here right at the top. What's price done? We've run above the high, and we've moved in that opposite direction. And he's just trading as soon as the market opens during New York. This is what it's all about. This is how simple and easy trading becomes when you can start to read the same consistent patterns that happen in the market over and over again. So this is a trade that I got involved in. I was very close to getting taken out of this trade. I was only about 0.3 away from getting taken out of this trade. I use a raw spread account, which means I pay commissions, but I get a zero spread. So I get taken out when I actually get taken out in the market. So this enables me to stay in these moves and gives my trade the best opportunity to play out if it's going to play out in that direction. So again, this was very close to taking me out, but I stayed in, and then we saw continuation here to the downside. I've only been in 2 trades this month, and that's this one and this one. These were the only high probability opportunities to play in this bearish initiation market, but that's enabled me to return 10% on a trade because I'm risking 2% per trade. So far this month, I've had a 100% win rate and I've made 10% out of the market. Now that's enough to pass any prop firm challenge. That's enough to get any private investment out there if you're consistently making amazing returns like this as well. This really opens up your opportunities to do whatever you want and achieve whatever you want within your trading. Like I said, it's 2 key things: understanding when to get involved and when to stay out of the market. Those are your 2 keys to success in trading.